So joining me now with more is Melissa Cohn. She's Regional Vice President at Raveis Mortgage. Melissa, welcome.
Thank you.
It's great to have you on the show today, and the timing is right because it comes after we heard from President Trump yesterday joining the World Economic Forum virtually, calling for lower interest rates. What is the market impact from those words?
Well, I mean, so far the bond market has not really moved at all, and mortgage rates are tied to the 10-year Treasury, which is, moves based on economic data. So for mortgage rates to really go lower, you would think that, we would need to see weaker economic data and lower rates of inflation. But Mr. Trump's policies on tariffs, immigration, and tax cuts are all inflationary, which actually would send mortgage rates higher. So I know that Trump is going to put a lot of pressure on Mr. Powell to cut rates, but the Fed is an independent group and they cut rates based on economic data, and I don't think that they're in a position to cut rates at the moment.
I do think you bring up a good point. Investors obviously did respond in kind to remarks from the president yesterday, but the Fed, as you mentioned, is an independent body and does set the path for interest rates based on a dual mandate of inflation and jobs. And in fact, we're going to hear from the Fed next week at its latest policy decision, the first of 2025, including remarks during a press conference from the Fed chair, Jerome Powell. What do we need to hear from Powell next week?
I think that we're hoping, first of all, that he is not going to be hawkish, because we've seen, that the employment sector has been stronger. Inflation has not continued to decline, and it's highly unlikely that the Fed will cut rates next week. But if Mr. Powell comes out and says that they are open-minded about future rate cuts and doesn't talk about the potential need perhaps to actually hike rates again, that that will set a good tone in the market. I wonder if he's going to remark based on Mr. Trump's remarks yesterday at the WEF, and it'll be interesting to see how Mr. Powell is going to react to Trump and his, mandate for lower rates.
Of course, we had the inauguration on Monday, a wave of executive orders from President Trump after that, and markets set for a winning week. In fact, set to close at a record high. In terms of what that means going forward, what are the other data points on your radar?
I really look at inflation and jobs. So, the Fed's favored inflation index, which is the PCE, which comes out Friday after the Fed's decision next week, and waiting for the jobs report the following week. Now, if we see that job growth remains strong and that the rate of inflation is not continuing to moderate down to the Fed's target goal of 2%, we're not going to see rates coming down. If we do see weaker economic data, if we see that inflation is coming down and that there are fewer jobs that are created, well, then we can hope for lower rates.
So what does this mean for different sectors within the housing space? Obviously, you're focused on mortgage, but we do know companies trade here in the public markets, mortgage companies, also home builders. And that is something that we have been covering a lot as well. Within the housing space, how are the other subsectors impacted?
That's a tough question, but, it's interesting because the housing market in many parts of the country remains still, strong, that their inventory levels are below a normalized market. And, builders are building and people are buying, especially the new home builders, because they have the ability to give incentives in terms of the mortgage rates in order to get people to purchase their homes. So I think that there is general optimism. I can say that within my company and with other companies that 2025 is going to be a good year for the markets, for real estate and for mortgages, and for the economy, and that we have hopefully come to a point where we realize that the low rates during COVID are not here anymore, and that we're in a different rate environment, and that we need to accept where we are and just move on.
Okay, so let's talk about prices, what this means for home prices. What is your forecast on that front?
I'm a mortgage banker, not a real estate broker, but I would assume that real estate prices are going to continue to go up as inventory levels remain so low. It really seems that people are back in the marketplace and in purchasing, and understanding that they're just going to have to accept today's rate markets, and then they can always refinance if interest rates come down. And if rates do come down, then that will send prices even higher because it'll improve the affordability factor and more buyers will come into the marketplace.
Melissa, what are the other conversations that you're having with clients as we are getting closer toward the end of January?
It's really a question of doing the math. If you expect to buy a home and you need to move, you have to move today, and you have to accept that what it is that you can afford to buy today. And hopefully at some point rates will come down. You'll have the ability to refinance and be able to then, move up. In order to be able to take advantage of home value appreciation, you have to own a home. So people need to sort of get into the game now and understand that they can move from there.
When is the right time for someone to engage with a mortgage professional?
I think as soon as you are considering a new home purchase, you should reach out to a mortgage banker professional in order to understand what it is that you qualify for in today's marketplace. With higher interest rates, people who got pre-approved 2 years ago when rates were 2% lower are going to find that the amount of financing that they can afford today is a very different number. Also, to make sure that there are no issues with regards to their credit, what kind of liquidity do they need in order to make the purchase, and really try to help set guidelines for the potential buyer to figure out what it is they can afford, what it is they want to buy, and how to get them there.
Melissa Cohn, Regional Vice President at Raveis Mortgage. Melissa, thank you for joining.
Thank you.